What's up, guys? Today we're going to go through the February numbers, a report published by Zoopla for the UK property market for February. Apologies that this one's come in April. These reports are actually published at the end of the preceding month, so this report is for February, but you can see here it was published 23rd of March. However, Lord willing, I will get these out on time, so I'll turn these around much quicker next time, but it's the first one, so bear with me. So really interesting stats for the month of February. What we can see is a house price growth for the beginning of March 2020 up until the end of February 2021 is 4.1%. 4.1%. So that is a decent growth for the year. Now, when you compare that to the average growth over the last 5 years in the UK, the average growth over the last 5 years has been 3.94%. 3.94% every year over the last 5 years. Okay, now 4.1 is just above that, so it's kind of in line with average growth. But it's surprising because we have obviously had one hell of a year last year with what happened with the coronavirus. So to see that house price growth has actually outperformed average growth over the last 5 years, considering the year that we've had, is surprising. And when we go on further, we'll have a look at why this has taken place, because it's very interesting when you go into the detail. And then the other headline figures are that demand is up 13% and supply is down 13%. So you've got a rise in the amount of people that are looking to buy houses, a rise in the amount of people, again, which is very surprising given the year that we've had globally. But again, as we go through this in more detail, we're going to see why the demand is higher. So let's look at the growth rate in a bit more detail geographically. We can see that growth rate wise, this is really being driven primarily by the northwest of England. As you go further towards the south, so we're talking about London and the southeast, you're getting down into the lower reaches, so sort of 2.5% and below. Now you can actually see, if we go down further, so we can see a full breakdown here. And right at the top of the list is Manchester, Liverpool, Leeds, Nottingham and Leicester. So guys, if you're looking to buy anytime soon, have your eye pointed towards these particular cities. I'd say in the top 10. You know, me personally, I have 2 places in Liverpool and a place in Sheffield, and I'm very happy about that because as far as the UK is concerned, from a capital growth perspective, the prices in these regions are really driving the country as a whole. So Manchester, Liverpool, Leeds and Nottingham, the usual suspects. You've got Leeds and Sheffield. And then as you go further down towards the end, as we mentioned, you got the likes of Aberdeen, Cambridge, Oxford. All of these regions further towards the south, it seems, are struggling. And why is that? Well, let's have a look at what's going on in Liverpool and Manchester. So I've just done a search for Liverpool regeneration, you know, just to see what comes up. And in the initial searches, you can see that there is a lot going on. There's 4.3 million results for Liverpool regeneration. This first one, you know, we're not even going onto the website yet, but you can see £14 billion of regeneration. And if we go into this one site, for example, there's a great breakdown here of what's going on in the city, what they're building. They're building commercial units, they are redeveloping land, they're building infrastructure, they're building houses. Well, this is like the magic 4, guys. If we go to, say, let's look at infrastructure. Okay, we can see that major highways are being built. Okay, the city council is investing £250 million to improve transport links. There's going to be a new cruise liner terminal, random, but I guess it's on the dock, so that makes sense. So this is, you know, big stuff going on, guys, in terms of Liverpool. They are pouring in billions of pounds to regenerate the whole city, not just a part of the city. And that's a big reason why you see a lot of, and that's a big reason why you see cities like, and that's a big reason why you see Liverpool leading the charge as one of those cities. And that's a big reason why you see Liverpool right up there as one of those cities where house price growth is increasing at a faster rate than the rest of the country, because that city is being regenerated. And then let's do the same for Manchester. So Manchester, I went to uni in Manchester, okay, and when I left in 2008, there was a ton of building going on then, and it's really just continued for the last decade and a half. So I think now they're kind of saturated in the city centre, and now the building is kind of rippling out from the city centre into greater Manchester, so places like Salford and Deansgate, etc. So big regeneration projects going on there. And let's just have a click on this first result. So moneyhighstreet.com, the regeneration of Manchester throughout the years. So the population has grown between 2000 to 2011. This article is 4 years old. Wow. So they've done a lot more since this article was written. But if we just scroll down and have a look at some of the stuff that's been happening. So 90% growth in the population, that's always a good sign. When more people come into a city or an area, they're going to need houses, guys. And when there's more demand for houses, the price goes up, okay? Very simple stuff. Then if we go further down, we can see 4 million square feet of prime real estate being built to house new offices, retail and leisure spaces. 800 million being spent there. So businesses coming into a city is always a good thing. Spinningfields, a Canary Wharf of the North. That's pretty self-explanatory, guys. 1.5 billion project, 20 new buildings. They're attracting huge businesses like HSBC, RBS, Barclaycard. So again, big employers coming into a city, more people coming in, more job opportunities, more demand for housing, guys. And one last one, let's look at this. Ancoats, New Islington. That's actually a very nice part of Manchester. I remember I couldn't afford to live there when I was at uni. But, you know, 6,000 new homes and £1 billion pledged towards a regeneration scheme in Ancoats. So all good stuff, guys. And then when we go back to the report, that explains why, you know, cities like Manchester and Liverpool are at the top. So what you want to do, if you're looking to buy in a city, any one of these or anyone that you might have in mind, have a research, guys, of what's going on in that city in terms of regeneration, and that will give you a good idea on whether or not it's a good prospect to invest in and whether you can expect future growth. So coming back up, let's talk a bit about demand and supply. So we can see that the average time to sell a property in the UK, excluding London, is 44 days. When we look into the detail, we can see that it's fallen by a week across the UK. Okay, so why is this happening? Why is the amount of time to sell a house falling? Well, that points to the point that we already made initially at the beginning. Demand. Okay, 13% rise in demand, and couple that with a 13% fall in supply. So in very simple terms, more people are wanting houses, but there's less houses to go around to sell. So therefore, power is with the sellers of these flats, of these properties, and they're able to shift their houses a lot more quicker because people want them. All right. And also, let's look a bit more into the details. So the 44 days is also driven by the demand, as we said, and this demand is key. And we can go into a bit more detail as to why demand is up. So there are a few components to this. So we know that recently the budget was announced and there was the extension of the stamp duty holiday scheme. So for those of you who are not aware of what the stamp duty holiday is, right now in the UK, if you're buying a flat or a house up to the value of £500,000, you're going to pay 0 stamp duty tax on that. And that's a big deal because prior to this, on properties between £125,000 and £255,000, you had to pay stamp duty of 2% on the gross amount, and between £250,000 and £500,000 you had to pay 5%, so either 2% or 5%. Right now it is 0. You pay 0 tax. That is tens of thousands of pounds saved. So naturally, a lot of people who are buying houses are scrambling to get these sales over the line before this stamp duty holiday finishes. And then also the rise in demand is being driven by a couple more factors. So in the last month, we have seen the budget be announced by Mr. Rishi Sunak. And part of that budget, he said he was extending the stamp duty holiday by another 3 months, I think it was, till September. So again, people are trying to get these deals, these transactions, these purchases over the line quickly before that stamp duty holiday ends. So people are rushing. There's a big demand for houses. And then also, as part of the growth in the price, we've seen over the past year that whilst we've been locked down in the UK, people have actually been trying to move from densely populated areas in the UK. So we've seen apparently 700,000 people leave London alone over the last year because people don't want to be around other people, which is understandable in the midst of a pandemic. So that's another big factor. So 2 big factors, right? The stamp duty holiday and the search for space amongst the pandemic year that we've had. So that is a big cause of these numbers that we're seeing here with regard to the rise in the house prices and the rise in demand. And then lastly with supply, a big part of the reduction of pent up supply is again down to Corona. So again, when I was trying to look for properties during the beginning of Corona, I had a bunch of viewings actually cancelled due to people being scared to show people around their homes. They didn't want strangers to come into their house and spread the virus, carry the virus into their home. So there is still a backlog of supply in terms of people not feeling quite right, not feeling quite safe enough to put their properties onto the market and sell it yet. There's also quite a lot of people who are saying, hey, look, we're in the midst of a pandemic, the economy's down, I'm not going to put my property on the market and put it up for sale until I'm confident that the economy is back on its feet again. Now, they might be waiting for a long time, and that's a personal decision, but that's where we're at. So guys, I hope that was helpful. If you like this format, this kind of video, I can make this a monthly thing. Let me know, and I'll see you guys next week.